Good afternoon, everyone. I'm Jonathan Parry, an equity capital markets partner at White & Case, and I'd like to extend you a very warm welcome from the firm to the first of our series of autumn webinars. I'm sure you're all very relieved to have something to take up some time on what's bound to be a very slow news day globally today. As I hope you know, today's topic is European SPACs, hype or opportunity. And I'm delighted that we're able to introduce a panel of the caliber we've assembled today. We'll be presenting live from London, Milan, New York and Stockholm. But before I introduce the panel, a couple of housekeeping points. We'll be taking audience questions, and these should be submitted using the Q&A function. We'll also be doing some live polling, so watch out for those during the session, and please do participate. If you experience any technical issues, please email EMEA events@whiteandcase.com. And as a reminder, this webinar is being recorded and a copy will be available after the event. And finally, you should hopefully be able to see an animation of this session on screen. This is being created live by a cartoonist and will document the ongoing discussions. And we'll be returning to this during the session and sharing with you all after today's webinar. So, joining me on today's panel is Hortense Alliage, an M&A correspondent with the FT who has covered SPACs extensively. And I'm sure many of you would have read the numerous articles she's written, in particular commenting on the recent wave of SPACs in the US. Also on the panel is Paddy Evans, head of UK ECM at Citi. Citi's been consistently the market leader in SPACs globally over the last decade. Paddy has led on a number of UK listed SPACs for Martin Franklin, most recently on the 1.25 billion IPO of J2 and its subsequent 3 billion acquisition of API Group. Perhaps reflective of the challenges faced by the European SPAC market, Paddy and the Citi team also led recently on the 300 million IPO of the Broadstone SPAC on behalf of Hugh Osmond and the Sun Capital team. And interestingly, this was a US IPO, but it's targeting UK acquisition opportunities. We're also joined by Adam Kostyal, who is the head of EMEA listings for NASDAQ. NASDAQ owns and operates 7 exchanges in the Nordics, with NASDAQ Stockholm, NASDAQ Copenhagen, and NASDAQ Helsinki being the largest. In terms of the US, NASDAQ has more than 200 European companies listed or dual listed in New York. And approximately 15 or so companies from the EMEA region a year choose to list or dual list on NASDAQ in the US. Adam tells me that so far this year, 80% of all US listings have taken place on NASDAQ. Obviously, no webinar would be complete without a lawyer. So finishing off the panel is Farigo Foscari, a partner in White & Case's Milan office. Farigo has more than 20 years experience working on ECM, DCM and M&A transactions and is ranked as a leading individual in Italy for all 3 of those areas. But before turning to our panelists for their insights, we'd like to play a short pre-recorded video by Joel Rubinstein, one of our capital markets partners in New York, who's leading the charge in the current epicenter of SPAC activity.
Hello, my name is Joel Rubinstein, and I'm a partner in the global capital markets practice at White & Case, based in New York. I spend a lot of time advising on initial public offerings and business combination transactions involving special purpose acquisition companies, or SPACs. I've actually been working with SPACs since 2004, so I've been part of the evolution of SPACs from a small niche product to the mainstream IPO alternative they have become here in the United States. As many of you know, the US SPAC market in 2020 has been white hot, and our group here at White & Case has been right in the middle of it. So far this year, our team has advised on more than 35 SPAC IPOs that have raised an aggregate of more than $13 billion, and we have advised on over 10 SPAC business combination transactions with an aggregate value of over $15 billion. So I know you're all thinking, what are these Americans up to with these SPACs? SPAC stands for Special Purpose Acquisition Company. SPACs are shell companies organized by sponsors with operating or investing experience, or ideally both, that raise capital by conducting IPOs and listing either on the New York Stock Exchange or on NASDAQ. The SPAC then seeks to combine with an operating company within a specified time frame, which is typically 2 years, or else the SPAC must liquidate and its funds must be returned to its shareholders. SPAC investors don't know in advance the identity of the target company the SPAC will combine with. For this reason, SPACs are sometimes called blank check companies. Finding a suitable target comes down to the skill and experience of the SPAC's management team, so investor confidence in their abilities is vital. Nevertheless, one of the hallmarks of the SPAC is that in connection with its initial business combination transaction, each shareholder has the individual right to redeem its shares for its pro rata portion of the proceeds held in the SPAC's trust account. Importantly, when a deal is announced, the SPAC must file documents with the US Securities and Exchange Commission describing the transaction and providing information about the target company, including audited financial statements, and then undergo a review process with the SEC that is substantially the same as the process it would undergo with SEC review in a traditional IPO, and this must take place before the SPAC can close its deal. The appetite this year for US SPACs has been huge. So far this year, over 140 SPACs have been floated in the United States, raising over $55 billion, far surpassing 59 SPACs, which raised about $13 billion last year. And according to SPAC research, there are a further 75 SPACs waiting in the wings. What factors are fueling this tremendous explosion? Well, pressure on the traditional IPO has been building for a number of years as companies have sought alternatives to address the perceived shortcomings in the process. For example, you may have heard about so-called direct listings as an alternative to traditional IPOs, but these too have significant shortcomings. Some of the important factors that have led companies to choose SPAC business combinations over traditional IPOs include the fact that the transaction is at its core an M&A deal, so the transaction value is fixed at the beginning of the process rather than at the end of the process, which is the case in a traditional IPO. Also, minimum cash for the transaction can be secured at the outset through entering into binding subscription agreements with blue-chip institutional investors for private placements or PIPEs. This ensures that there is at least a certain amount of cash available at the time when the business combination closes. Also, at least here in the United States, financial projections can be used in marketing the transaction. Existing owners of the target company may also be able to take out more cash in connection with the transaction than they could if they were conducting a traditional IPO. Finally, if the owners of the target company think their company is worth more than the market is ascribing to the company at the time they enter into the agreement can build in earnouts, which can allow the owners to get stock, additional shares of stock in the future if the share price performs up to certain thresholds. In addition to these technical factors, there is the value to the target company of aligning itself with big-name SPAC sponsors. SPAC sponsors include Wall Street veterans, private equity fund sponsors, and current and former public company executives who can provide valuable advice, access to capital, and open doors for the target company. The SPAC market in the United States really took off this year in the wake of the success of a transaction that our team worked on. In late December 2019, Diamond Eagle Acquisition Corp. Announced that it had reached an agreement to acquire DraftKings, which is a digital sports entertainment and gaming company, and SB Tech, which is an international turnkey provider of sports betting and gaming technologies. By the time the transaction closed in April 2020, its common stock was trading at $17.50 per share, up from $10.17 prior to the announcement of the deal. Since the closing, DraftKings stock price has reached a high of over $60 per share, and the company has also conducted 2 follow-on offerings of approximately $1.6 billion each. The success of the DraftKings deal caught the attention of many SPAC sponsors as well as companies seeking liquidity. And the current pandemic has done little to dent enthusiasm for SPACs. Indeed, pandemic-related market dynamics may even be contributing to their popularity. So what does the future hold for the US SPAC market? This will very much depend on how the recent business combination transactions perform, not only in the short term, but in the longer term. We are currently seeing a bit of a pullback from the torrid pace of IPO issuances over the last few months, which actually is probably a good thing. But business combination transactions continue to be announced every week, and new issuances are continuing as well. Certain sectors in particular have seen a lot of focus, including ESG, new media and gaming, and life sciences. SPACs have been resilient over the last 15 plus years, and while they may ebb and flow, recent experience suggests that they have become an important and mainstream alternative to the traditional IPO process here in the United States. So the question is, what will happen in Europe, and will this product move its way across the Atlantic?
So after that introductory piece, could I turn to you or Ten, so just to go into a little bit more detail about how the SPAC market in the US has evolved and where you think it is currently?
Hi, yes. So for me, SPACs have probably been the sort of biggest corporate story we've seen this year, or one of the biggest at least. Everything has surpassed the record in terms of issuance, so how much money is going into these vehicles, the size of the deals, and also the volume of deals that we've seen. And it really has been a standout year amid a global pandemic. I think a few of these points have been touched upon, but to sort of give a perspective of where the US market is, the SPAC sponsors that we're seeing now are of an entirely different caliber than we saw, for example, in 2006, 2007, when we had another large SPAC boom. That was obviously just preceding the financial crisis. And at the time, SPACs were sort of sitting on the fringes of finance. They weren't associated with big law firms or big banks. It was more of a product that a lot of people hadn't really come across. And that's changed significantly over the past sort of 14 years. But the volume that we saw this year, it was entirely unexpected. I think by a large subset of people who look at the markets, we were looking at SPACs that were raising $4 billion, for example, like Bill Ackman's SPAC. And by the end of summer, we saw the amount raised quadruple what we'd seen in 2019. And that was obviously before the end of the year. So why are SPACs big in the US now? Well, there's been a push, especially among SPAC sponsors, about the sort of the problems with the IPO market and the traditional route to becoming a public company. And then you saw a huge liquidity crunch that put a lot of companies into the arms of SPAC sponsors because they could gain cash quickly and they could have a fast track route to IPOs. So it's become a popular product because companies are basically wanting to gain liquidity, and they're seeing that they can actually get a management team that's very reputable now. Like I said, the sponsors are what is arguably much better quality, and it's people who've been in the financial industry for a long time. Of course, that's not all we're seeing. We've seen people like Shaquille O'Neal become a part of a SPAC, and we've seen someone from the former House Speaker do a SPAC. But on the whole, it's become a strong Wall Street product. The drive was seen from largely, I would say, DraftKings, Virgin Galactic, Clarivate. These are three deals that did very well. In some cases, investors quadrupled their money, and they really caught the imagination of the people who were investing in them. And those success stories have sort of driven this big boom. And what we've seen is that kind of performance, whilst it's great, it's pretty rare to come across. We did a study that showed that SPACs generally tend to underperform the IPO price of a special purpose acquisition company, which is $10. We looked at all the SPAC launches from 2015 to 2019. And of the ones that had struck a deal, about 2/3 were trading below the $10 price. So performance on the whole hasn't been that great, but that there is some optimism that that's going to change with the level of investors that we're seeing at the moment. And the SPAC's popularity sort of comes hand in hand with a lot more scrutiny now. So regulators, Jake Layton has come out saying that they're looking at the market. And there are some controversies and controversial features. The most well-known is the promote, which is the 20% equity in the company that a SPAC sponsor gets for a nominal sum that is usually about $25. That translates into a stake in the acquired company. And it's led some to think that actually this is a very lucrative investment for SPAC sponsors, and it can lead to some misaligned incentives between them and their shareholders. And the other one is warrants. Warrants are the investment that, or a lot of SPAC sponsors will buy warrants in the vehicle, and that will usually be in the multi-millions. And that's effectively a bet on themselves that they can find the right company, because if the SPAC liquidates and no target is found, then warrants expire worthless. So that's, again, although that starts to align your incentives with your shareholders, on the flip side, there is an incentive for you to get a deal done as a SPAC sponsor, because if the 2-year period runs out and you don't get an extension and you have to liquidate the SPAC, you don't get your money back. And so that's $14 or $15 million that you've essentially lost. But it's also important to remember that when a SPAC finds a target, the shareholders can vote it down. We very rarely see that, but that's one of the features that SPAC sponsors will often say can protect shareholders who don't necessarily want to partner with a company that the executives have chosen. And in terms of the development of how SPAC sponsors are approaching the product and how the structure is changing, we are starting to see, especially amongst serial SPAC sponsors, or what we like to call serial SPAC sponsors, so executives or companies that have launched 2, 3, 4, 5 SPACs, that they are making attempts to align their incentives with their shareholders. A good example is, for example, for Chamath Palihapitiya, who partners with Ian Osborne, they invest their own capital once the deal is done through a PIPE investment. Or someone like Michael Klein, for example, who on the Churchill transactions will insert caps, so they can't sell out of the stock until it reaches a certain price, or the stock isn't fully vested until it reaches a certain price. Or you have the example of Bill Ackman, who's done away with a promote entirely, and that's a feature that a lot of people in the market tend to refer to as a SPAC 2.0 or 3.0, but there does seem to be this kind of wind of change coming on how sponsors are approaching the issues that have been raised. The biggest issue we've seen is around due diligence. The most obvious example is what happened with Nikola. So Nikola went public through a SPAC in early summer, and at one point it had surpassed the value of Ford. And this was an electric car or electric truck startup. It didn't really have a product yet. It was more of an idea. And a short seller report came out months later alleging that it was a fraudulent company. And that really started to flag some of the issues around how much due diligence is being done around SPAC targets versus IPO, or versus companies in traditional IPOs. And whether some companies are indeed ready to go public when they're acquired by a SPAC. But on the whole, the market has definitely improved from where it was during the last SPAC boom. And it will all, I guess the proof will be in the pudding. We'll all have to see what happens in terms of performance from the SPACs that we're seeing over the past 2-3 years, and how that structure develops. And we'll see how investor interest goes. I don't think they're going anywhere anytime soon.
Great, thank you, Hortensia. A really helpful summary of how things have developed in the US. Before turning to Paddy Evans to add his insights, I'd like to table our first poll. And so the question is, what is a bigger contributor to the relative lack of SPAC activity in EMEA? Is it A, investor appetite, or B, regulatory or structural factors? So please do cast your votes now. You'll need to come out of the full screen mode in order to do this. So Paddy, if I could turn to you now, it'd be great to have your investment banker's perspective on the US market, but also any insights you might have as to why activity levels in EMEA have been relatively low by comparison.
Sure, thanks, Sean. Yeah, look, I think Joel and Hortensia have already touched on a number of the key points. Look, I think the level of issuance in the US has far surpassed everyone's already lofty expectations. But I think what actually is also critical is there is a fundamental change in the quality of the businesses that SPACs are able to buy. Before, a lot of people were focused on SPACs being a product for businesses that didn't quite fit an IPO bucket or an M&A bucket, whether they had the wrong leverage, the wrong capital structure or such thing. But actually what you're starting to see now is businesses that are really, really high quality businesses being sold to SPACs for a variety of reasons. And I think that is a step change. And I think that is something that is here to stay in the US. And I think that is what is going to continue to drive the market and make the product and the longevity of the product stay. And I think is what's going to, is going to be a key catalyst in the UK and in Europe. I think as you think about, where it could go from here, though, the other big question, though, is what is the performance going to be of the SPACs through an issuance? So, since July, the amount of issuance has been unprecedented, but obviously there's a huge amount of capital now that is out there looking for deals. So I think we're going to have to judge this vintage not now, but where this vintage gets to in 12 months' time when they start to do the back end of it, which I think leads us on to the question of Europe and what the challenges are in Europe. I think there's a popular misconception in Europe that the issues here are down to structural reasons. I think there are many of the structural points in the US which are working well, which you can actually do in Europe. It's just what's happened is to date, issuers have chosen not to do them. So, for example, in the UK, the shareholder vote is, of course, something that anybody could do. You could have a redemption structure. I think what there is in Europe, though, is particularly the big challenge is around the fact that stock gets suspended in the UK. And obviously what that means is if you're an investor in the SPAC, you don't know what the business is worth when it comes to the combination and the vote on the combination, and indeed your ability to trade out of it for some of those investors who are there to help facilitate the liquidity. So I think there are some technical challenges, but fewer technical challenges perhaps than people recognize. So I think, and it's very clear that the number of exchanges in Europe are very focused on this and resolving some of those technical points. So I think that is something that can be fixed quite easily. And indeed, if issuers choose to have something that looks and feels a lot more like the US SPACs, I think that's certainly possible. I think the next question obviously is around investor appetite, which is the big question and the big challenge. I think as we've have conversations with a number of potential SPAC promoters in Europe, the first question for us is that we always get is, can you guarantee that the investor demand is going to be there? And this is conversations with issuers who have a very strong track record, who have a very high profile, and would, under normal circumstances, if they were a US issuer, have no problems raising the SPAC. And I think it's a very fair question. I think a lot of it comes down to the historic track record of some of the SPACs in Europe, not just in the UK, but in other European geographies. And I think there's good reasons why a number of those have failed. So I think the reality will be that you will need to look, in our view, you will need to look and feel more like a US SPAC to get the US investor base to participate, so that they don't have the questions and saying, what is different here on the structure? It's the same as a traditional IPO. If you spend too long talking about the wrong things in an IPO, you don't spend the time talking about what the positives of the business and the opportunity are, whether it's leverage or other issues. So I think, our view strongly is that, that as you can move towards replicating the US structure, we believe the buyer base will be there. The question obviously will be who will be the first to put their head above the parapet and have the confidence to try and launch a European SPAC. Because if you take a step back from it, as Joel mentioned, there's 170 SPACs that have listed in the US this year. We're starting to hear stories of SPAC auctions in the US. And if you think about the SPAC as conditional capital, if you're in an auction process, by its very nature, the returns that you expect to get are going to be diminished because you're obviously going to be paying a higher price for it. And therefore, the opportunity set when you're actually a bigger fish in a small pond over here, I think, is far more compelling. And that's certainly, the conversations that we're having with issuers. So I think, we believe strongly that with the right promoters and replicating the right structures, and a number of the exchanges already allow you to replicate the US structure, the Netherlands, for example, we believe that there will start to be a trickle, and we have high confidence that after that, that others will follow, as long as those first issuers who come out do good deals and they indeed trade well.
Great, thanks very much, Paddy, and feeding in to actually the question we asked on the poll. But turning to Adam now and continuing on that theme, can I ask you for your sort of the exchange's view, I suppose, on the SPAC trend in the US and in Europe?
Thanks. So just to give some clarity in terms of NASDAQ Europe, basically we own and operate the exchanges in the Nordics. I look at it from a Nordic perspective, which is the European context. Will a SPAC fit our Nordic offering? And we're actively looking at that. To Paddy's point, I think every exchange in Europe today is looking at what is the appropriate SPAC structure to make it work in their local markets. So that's what we're looking at from a Nordic perspective. From a European perspective, I think this most active SPAC market today is probably in the US. We are spending more and more time with European sponsors, European companies that are looking at the US SPAC market. Should they launch a SPAC? Are they looking for a SPAC to list in the US? So a key part of my everyday job, basically, and that of the team, is to discuss with European companies that are looking to list in the US or do a list in the US, how do they access the US markets in the most appropriate way? And SPAC certainly has become a credible alternative and a very discussed alternative in that context. From a NASDAQ point of view, we see SPACs as a complement to our overall offering. And I think if you compare to the point about the quality of the SPACs, I think our key focus here is really to make sure that the companies at the end of the day meet our requirements. So we spend a lot of time in terms of the scrutiny of making sure that there's no shortcut in meeting our requirements in terms of accessing the public markets. So that's a key point in terms of the discussion around Nikola Tesla, etc. I think one of the key concerns about SPACs is, some companies potentially, even though they meet our requirements, are maybe not as mature in handling the public markets. And that's something that, by shortening down the time frame to access the public markets, I think the sponsors and the companies, together with the advisors, have to make that assessment, that it's not only a question about meeting our requirements, about the predictability and the level of maturity of being able to manage the public markets. So when we look at it from our perspective, we're trying to make sure that from a NASDAQ point of view, that we are the most attractive market for these SPACs and for the companies that are looking to leverage a SPAC to come to market. So if you look at the statistics, we've mentioned some today already. So far, together with IPOs, traditional IPOs, you've had 256 IPOs in the US with SPACs. If you take away the SPACs, there's been 188. 82% of these have been on NASDAQ in the US. So we're aggressively, trying to make sure that we are the best or the most appropriate market for these companies to leverage as a marketplace to leverage to access the US markets. If we move on, in terms of other statistics, if you look back at 2019, we had 59 SPACs listed and $13 billion raised. And if you then move on to 2020, you see the comparison in terms of the dynamics that we have, with close to 170 SPACs now listed. The average ticket per SPAC is roughly $340 million. And we have close to $60 billion raised. And it's just an astonishing figure in terms of how the SPAC now has been moved from the back door or the back room to the front room in terms of being a credible way to access the public markets. And the same thing goes for direct listings. We had 19 direct listings prior to Spotify on NASDAQ. When Spotify did it, all of a sudden direct listings became a credible way for established companies to leverage the access to the market. So we've seen the same trend. When we look at it from a European point of view, I couldn't agree more with Paddy. I think at the end of the day, I think a SPAC could work in Europe. It has to be much more aligned on a European basis in terms of the characteristics of this and the requirements of the SPACs. So I think we are looking at it from a Nordic perspective to take the US approach. And we're launching that by end of year. Why are we doing it? We're doing it because we want to make sure that our public markets in the Nordics have that complement. I think the other aspect is that necessarily a SPAC will not fly as aggressively in the US, because at the end of the day, we are listing small, medium-sized companies quite efficiently in the Nordic markets. So therefore, you have to ask yourself, is the IPO mechanism broken in the Nordics? That's what we're looking at. And therefore, how will the SPAC fit into that Nordic context? When you look at other European markets, we see a lot of the characteristics in the US. It's difficult to list smaller, medium-sized companies. If you take Germany, they listed 13 companies last year. We listed 63 in the Nordics. That's a population of 25 million compared to 80. So at the end of the day, we want to make sure that we are looking at this holistically. but always making sure that whatever we use in terms of accessing the public markets is not a shortcut, but is a credible way of accessing the public markets with transparency and predictability for everyone involved.
Great, thanks, Adam. Some really interesting data and insights there. And just to follow on from that, is it possible now to look at the results of our first poll? Okay, interesting. So 47.8% thinking that the investor appetite or lack of investor appetite is the biggest contributor to the lack of activity, and 52.2% cite regulatory or structural factors. So it does seem that the exchanges and regulators that are looking at making structural changes to the SPAC framework could well have an effect on encouraging SPAC activity in EMEA. Very interesting. So can I now table our second poll? The question is, which European market will see the most SPAC activity in 2021? Will it be France, Germany, this is in alphabetical order, by the way, France, Germany, Italy, the Netherlands, the Nordics, Spain, or the UK? So something of a Eurovision Song Contest of SPAC activity. Again, you'd have to go out of full screen mode in order to cast your votes, which I'd encourage you to do now. And on the basis that lawyers always like to have the last word, Farigo, can I turn to you for your perspective as a legal practitioner in EMEA?
Yeah, thank you, John. So, I mean, I think touching upon the exit of the polls, right? I mean, I do, and on the main question, we started off on the regulatory structural issues or investor appetite. I actually do understand why the outcome of the poll were 50% more or less, because I do think that both those elements are relatively crucial. But at the same time, as other panelists have said, I also think that on the regulatory side, there is a misperception. And in essence, Europe, I mean, first of all, I'm stating the obvious, but it's also something which is pretty important, that Europe has several countries, and not all countries have the same regulations, and in particular under the SPAC perspective and the SPAC regulation. So despite we have a general framework that is clearly not applicable throughout the markets. But having said so, we have different regulators, different regulations, but the SPACs are not picking up in Europe. And so it must be something else, or it must be something which goes beyond just regulation and beyond the pure requirements of law. So as we mentioned, some of the regulators are currently sort of working on SPAC regulations to make it either more attractive, as the Nordics, where I understand there's no current regulation on SPACs. Other jurisdictions, such as Italy or other countries, are looking at the current regulation in order to see whether they can make it more flexible, more at the same time more interesting. But again, based on my experience, you can actually structure in most European jurisdictions SPACs, which would follow, in essence, the key elements and the key sort of structural elements of the US SPAC. So now the process is simple. You have the typical and the main protections that we discussed in most jurisdictions. Investors have a final say, and they can exit the investment. They can redeem their investment if they don't like the business combination. As we've heard, despite in England and the UK in general, people have also always considered and structured SPACs in a more rigid way in order to avoid the possibility to redeem the investment. Actually, also the UK would allow that from a structural regulatory perspective. So my personal view is that it's not the regulation which is actually blocking Europe from having a very sort of sparkling, or at least trying to be sparkling market for SPACs. So there must be something else. And the two things I think is also on one side probably a thinner investor base, which is prepared investing in these vehicles. And at the same time, there must be something also on the management perspective and the sponsor perspective, because clearly we've seen some, and we've had this trend of some very sort of high quality European sponsors looking into the US, looking at to promote SPACs moving from Europe into the US. So I think that ultimately there's two issues. The first thing is the confidence of sponsors in actually pursuing the avenue of SPACs. A thinner sort of market of investors in Europe, or at least not yet ready to follow the sponsors into the SPACs as much as they've been following the sponsors in other more sort of traditional sectors as the private equity. And then something that we've seen in Europe, and it's going to be, I'm touching upon what others said before, I mean, it's going to be very interesting to see in the US. Now you have tens of billions in the US which have been brought to SPACs, right? And these tens of billions need to be invested in the next couple of years. Now in Europe, unfortunately, we've seen some investments which have not gone the right way, and others have actually mentioned also investments which went really badly, right? So the problem is now the deployment of these means, and clearly the tens of billions will have to find possibly tens of billions of target companies, and again there's going to be a friction, and the capability of delivering, as others said, quality of business and capability of securing assets which have high quality is not granted, and I think that in Europe we've seen that happening, and that has sort of to a certain extent, I think, compromised the markets and the sort of the trend of the SPACs. So that's I think in general that based on what we've spoken also with our partners throughout White & Case's offices, I mean, in Europe we will see some increase in activity. I don't think that we will ever see increases of activity which can even be comparable to what we've seen in the US, and we'll still continue to see European sponsors moving into the US because they will believe, and they still believe, that there's a lot of that there are a lot more opportunities to raise capital there than in Europe at this time.
Great, thank you, Farigo. So before moving on to the Q&A part, is it possible to see the results of the second poll? Okay, interesting. Happily, no jurisdiction got 0 points, but yeah. So the UK well ahead with 56.7% of the vote. Interestingly, the only jurisdiction where a SPAC's listing is suspended at the point of acquisition, as far as I'm aware, and then fairly even running between the Nordics, Netherlands, and Germany, with then moving down to Italy, France, and then Spain. So that's, I don't know, some food for thought for people. Very interesting. Okay, so turning now to the Q&A part, where we look at some of the topics in a little bit more detail. And just a reminder to the audience that the panel are still taking questions, so please do continue to send those through. I think an interesting question that's come through, probably one for Hortense. You talked about the caliber of sponsor and management team changing over the past sort of 10 years or so. In your view, is there a difference between the kind of box office sponsors and management teams you see in the US as compared to the same sponsors in EMEA? Is there a difference there as far as the market's perception?
I think this is kind of touches upon the blank check point. You are effectively, as an investor, writing a blank check to a person, an executive or a firm, whoever is behind the SPACs, and you have no idea what company they're going to target. You're putting your faith in this person that they're going to be able to find a company that's going to make you money. So it matters very much what kind of sponsor is behind the SPAC, or at least it should. Unless you're a hedge fund doing arbitrage or something like that. But if you're investing in it because of the end return, you should care about who's behind it. I think the UK or EMEA rather tends to be, obviously, we know this, economically a couple of years behind the trends that we see in the US, and we're probably going to see more high caliber sponsors come forward. But I think at the moment the US probably has a kind of a lead run on that front, and that obviously wasn't always the case. But with people, for example, like Michael Klein, who's an ex-Citigroup deal maker, and Bill Ackman, and they're big names on Wall Street and they're trusted figures. So I think investors feel quite comfortable parking their money there. That being said, you do have someone like, for example, Shaq O'Neal, who's part of a SPAC now. It's not that we just have Wall Street figures launching these. There are a multitude of people across industries, including Hollywood, Washington, and Wall Street, who've launched them. So, yeah, I think it'll be interesting to see who attempts this in EMEA and who does well. But yeah, there's a huge reliance on the sponsor.
Great, thank you. I think this one's probably for Paddy. The question is, given the relative lack of active European SPACs, are there significant precedents of US listed SPACs investing in European assets?
Look, I think to date, the US SPAC that have come, the number of US SPACs who've come to Europe to actually buy things, I think has been relatively limited. I think if you look at the depth of and the size of the market in the US, they've successfully been able to find opportunities over there. I mean, obviously, as we've sponsored for many, many years SPACs in the US, and we would regularly get country teams would have to come up with their list of best ideas for SPACs. They'd come over here. The reality was that those executives would often come over here, they'd listen to those, and then they'd quite quickly go back to the US and find opportunities over there. I think that is definitely changing. It's not surprising with the number of SPACs that are out there that we are definitely seeing more SPACs coming over here to look at opportunities, just because it's so crowded in the US. And then the other thing, which is a trend which we've undoubtedly seen, look, we did the deal for Hugh Osmond and the Broadstone team. We also did one for GBL and NNS for Avanti. There is now US listed SPACs that are focused on Europe very specifically, and looking at our pipeline in terms of additional SPACs that we expect to launch probably in the new year, there's going to be a bunch of other ones that are going to be focused on Europe. I think it's safe to say, until we can crack the European market where people have the confidence that the investor base there or the regulatory structure is in place.
Yeah, great. Okay, thanks, Paddy. And I think moving on from that point onto EMEA exchanges. Adam, can I have your objective view as to whether you think any stock exchanges in EMEA have a natural advantage in attracting SPACs? And have you seen any evidence of exchanges making efforts to become leaders in the area, is the question. I think we may have lost Adam there. So if we maybe flip to Farigo, one for you, just to ask, the question is, to what extent do you think regulators at EU and national level are receptive to actively considering changes to laws and rules to facilitate the wider use of SPACs in EMEA?
Well, I mean, I think that naturally this will happen. It has happened with respect to other regulations. There's always a fight to make sure that your venue is the most attractive venue, and it's just not a European matter, but is a broader matter, because as we have seen in the past few years, there's been consolidation throughout listing venues, and ownership of several listing venues have been concentrated. So I do think that this is inevitable, and people are moving into that, and there's more natural. I think that the outcome of also the poll again is quite natural. I mean, London has always been seen as the capital of sort of the European financial market. So I think that despite what's happening with Brexit, I mean, that is a natural outcome. And definitely there are other markets which will come and follow, like the Netherlands. We've seen that also with respect to more traditional IPOs, that the Netherlands have been picking up market shares in the last few years. So I think that will happen, and that regulators will be fighting to gain the SPAC market.
Great, thanks, Farigo. Sorry, and Adam, I think we lost you there briefly, but the question was: do you think any stock exchanges in EMEA have a natural advantage in attracting SPACs?
No, I don't think. I don't think necessarily any exchange has a natural advantage. I think London has been perceived as an international marketplace where a lot of international business has gravitated, but I think that is also up for discussion in terms of what's going on with Brexit and so on. But I think from a perspective, each market has to have, has to evaluate whether the SPAC can be a local complement for its own local market. At the end of the day, a Nordic sponsor would probably benefit best from looking at its local market and issuing, assessing the viability on its local market to start with. At the end of the day, what we're seeing, as Paddy is saying, we're seeing incredible interest now from Europe to US, and that's where we're spending most of our time. And as we're launching the SPAC offering in the Nordics, we're increasingly getting interest from the local market in terms of how this could fit and how this will work.
Great. Okay. Thanks, Adam. I appreciate the focus of the discussion and the actual title of the webinar has been on where EMEA is going to be next year. But Hortense, the question's been asked: what's going to happen in the US in 2021 as far as SPAC activity is concerned?
The impression I get, obviously I don't want to, I've learned this from people I talk to, they should never make predictions. But the impression I get is that there is an oversupply at the moment. There have, the rush of fundraising had to sort of reach a moment of reflection at some point. And I think now we're kind of looking at how this is all going to affect deal making and the hunt for companies. There's obviously, there's the argument can be made that there's way too much money chasing way too little companies that are actually viable or ready to go public. So we could, it's likely that we could see a slowdown and sort of, a calming of the market. But I think on the whole, the impression I get is that they're here to stay. Perhaps not at the volume that we're seeing at the moment, but it's definitely become something that a lot of people are interested in, and a lot of companies. To reiterate a point made earlier, a lot of companies are seeing them as a viable alternative to IPOs, and the caliber of companies that they're going after is also better. I think we wrote, and about a couple of other publications wrote about Bill Ackman, for example, approaching Airbnb. So I think it's an asset that's here to stay, but I don't know that it can sustain the level that we have at the moment.
No, fair enough. Okay, thanks for that. Possibly one for Paddy and or Adam. If you could import one structural feature from the US SPACs to EMEA, what do you think would be most helpful to promote activity?
Can I start,
sure,
maybe, and then or
you go for first, please do.
Okay, sorry. Well, we're of course happy that Airbnb is going to list on NASDAQ, so we wish them well through a traditional IPO, but certainly SPACs were in contention. But in terms of, I think, when we are looking at rolling out the SPAC structure in the Nordics, we are definitely looking at the US model. And I think that's important to make the US investor feel comfortable, the traditional SPAC investor feel comfortable with the European vehicle. I think one thing that we have looked as we've looked at the European landscape, because there are different SPAC structures there, Italy, Holland, the Netherlands, and then the UK. I think the UK one is particular in terms of suspending the company when they de-SPAC. I think that's something that has created a lot of frustration and concern, both with sponsors, companies, and investors. So that's definitely one feature I would argue that we're not planning to roll out in the Nordics. And I think we need to make this a more harmonized structure. But at the end of the day, you have to keep in mind the protection of investors, and also the shareholders that are planning to go in there. So it's I think the SPAC structure will evolve as we speak. But I hand over to Paddy.
Look, I'd actually answer the question slightly differently. Is in a way the question should be, are there things that we could do better in Europe? Because I think there's a popular perception that the US structure, everything is right about it. I think there are many things there which, for example, the extent of the promote and the dilution that occurs from that, you could argue makes doing transactions more difficult. So I think the question should be, can we replicate what is right in the US structure, what is well understood by investors, and therefore that they will be able to say, okay, I get that, I have protections, but are there things that we can do in Europe better to make the fact that SPAC's better at the end? Because it's easy to say it's all about raising the SPAC. I think the real question is, and this is what I think is going to drive the market, is the ability to do de-SPACs at the back end, because the finding good businesses, getting those businesses listed and those trading well is what's going to define the success of the current wave of US SPACs, and indeed the ability to get UK, Europe and other SPACs done here. And I think that's what we've got to really focus on.
Great, thanks both. Sorry, Adam, did you want to add to that?
I just wanted to say, in this low interest rate environment, raising money is not the difficult dynamic. The dynamic is really transitioning the companies into a public environment in a credible way. So I think that the last point that Paddy makes is very relevant here.
Yeah. Okay. And actually, it's the subject of possibly the last question for Farigo, and I think it's something that Hortense touched on when she summarised. Was Farigo, do you think there is a significant difference in diligence risk if you compare the SPAC process with a traditional IPO?
Well, I mean, we've seen that there has been. So the answer, if you look at that what has happened, is that we've experienced it. Now, in general terms, I think that more sophisticated markets and I think the US, what I've heard, at least because I haven't done US SPACs directly, is that there's not a big difference, because when the transaction is then the business combination is then entered into prior to actually execution of the business combination and completion of the business combination, there is a diligence activity is carried out, and it's in essence something which is comparable to what would happen in an IPO. In my experience, I would say that the diligence level it has more a spin, which is sort of more an M&A spin focus more than a capital markets focus. So there may be, given that when you get to the important part of the SPAC process, which is actually finding the target and purchasing the target companies, very often that is driven by an M&A spin. So I think that there is work to be done, but in general terms, I don't see an issue from an investor perspective, nor sort of a risk of having that as a structural issue. It's as usual. I mean, you have good firms with good financial advisors who do good diligence, and bad firms and bad financial advisors who do a less better job.
Great. Thank you, Farigo. So just I suppose the final question, circling back to the actual title of the webinar, it'd be useful to have a sentence or two from each of you to answer the question. European SPACs, hype or opportunity? So, Hortense?
I think it very much depends on how EMEA approaches it, but in all likelihood, an opportunity. But that's taking on lessons, I think, from the US and implementing them.
What do you think, Paddy?
Look, I guess as an ECM banker, we're sort of paid to be optimistic. But look, I don't think you can underestimate the size of the opportunity. Look, I think it is a product that's continuing to evolve. I think as a product structured right can be highly attractive to vendors as well as investors. And for that, if we learn the lessons from the US and perhaps even improve the US structure, I think it is a massive opportunity for us.
Great. Similar theme, Adam?
Yeah, I definitely feel it's a hyped opportunity. So I think definitely the European market should have this as a complement to their existing offering. I think we have to do it in a credible way. There's no short-termism in this in order to make this fly. So I think we have to learn to Paddy's comments, pick up what works in the US and make it better here in Europe. And at the end of the day, we want companies to come to the public markets because I think there's a lot of value created for overall society by doing so. If we can create efficiency in that process, then I think it's a benefit to all. But we have to do it with credibility and not short-termism. So, but definitely, we see a lot of interest and we're evaluating it.
Great, thank you. And finally, the view from Milan. There you go.
I actually share the view. So I'm an optimistic guy, so I think that's going to be a big opportunity, frankly speaking. There's work to be done, but I do share the view.
Great. Well, look, thank you to all of the panelists for joining. Thanks to Hortense, Paddy, to Adam and Farigo, particularly Hortense, who has joined very early from New York and presumably will be covering the election. So you're going to have a long day. And thank you to our audience for your questions. And we sincerely hope you'll join us for our other autumn webinar series. And if I could plug the next one on sustainability first on the 5th of November. So thank you very much and goodbye.